All right, this next exercise is titled Determining Retained Earnings and Net Income Using the Balance Sheet. Well, now retained earnings is a part of the balance sheet. It's one of the two components of stockholders' equity. But we want to remember that retained earnings flows into the balance sheet via net income on the income statement, and then we subtract out any dividends that are paid on the statement of retained earnings. And so it's net income minus dividends, and then we add whatever's left to existing retained earnings, and that flows into the balance sheet as the new retained earnings balance. Okay, so retained earnings, balance sheet, net income, income statement. All right. So the following information is reported for Kinney Corporation at the end of 2018, and then we have these figures here. And then if we look down at what they want from us, the first thing that they want in requirement A is to compute the amount of retained earnings at the end of 2018. So let's see what we have here now. We have a bunch of, well, not a bunch, we have a handful of accounts. These are all balance sheet accounts, okay? But the only way that we can solve for A here is to know the difference between assets and then liabilities and equity. We could actually, even if we didn't know the difference between equity and liabilities, we could solve this, but we absolutely have to know the difference between we have to know what our assets are. I'll put it that way. So what I'm going to do is, since we are solving for retained earnings here in this box, is I want to list my assets. And normally this is not the way that we would necessarily list these, but I want to go in order. And so the first item is accounts receivable. And accounts receivable is it is a current asset, and we don't really need to distinguish between current and non-current, putting these in order of liquidity, so I'm just going to write them down in order. Okay, so assets, first one is $23,000. Accounts payable, not an asset. Cash, $8,000 is definitely an asset, so I'm going to mark that one off, and I'm going to plot that right here. Common stock, also not an asset. Retained earnings is what we are solving for. Supplies inventory is a current asset. We're going to plot that here and make a little X by that just to indicate that we already used it. And then equipment, $138,000. This is a non-current asset, but it is in fact an asset. Okay, so we need to take these figures here and add them together. 23,000 plus 8,000, that was the cash, plus 9,000 for the supplies, plus 138,000 for the equipment. So our assets are $178,000. Let me space this out a little bit more. Okay. Looking at our remaining items, we only have one liability, and that's for $11,000. So I'm just going to go ahead and, I guess I'll write it twice. And then the total is $11,000. All right. And there are, of course, two components to stockholders' equity, and one of those is common stock, and we have that figure right here as $110,000. Okay, so what we could do is we could say, okay, I probably should have just left this on the calculator, $78,000 in assets. And we can actually rewrite this equation and to solve for this number. So I'm going to do that. I'm going to subtract out liabilities of 11,000 minus common stock equity of 110,000, and that gives me 57,000. So I know I'm going to put RE right there because that's what we're actually solving for. And this is the A requirement. The answer is $57,000. Okay, and again, you know, we could test this. We have assets of 178 equals liabilities of 11,000 plus 167,000. The B requirement says if the amount of retained earnings at the beginning of 2018 was 30,000 and $12,000 in cash dividends were declared and paid during 2018, what was its net income for 2018? Okay, so I would take this in a couple of steps. Our new retained earnings, or our ending, is 57,000, and I would subtract from that the beginning, and that's going to give me 27,000. Okay, so retained earnings went up by 27,000. However, that's not our answer because we have to count for these dividends. If we had not paid out these cash dividends of $12,000, we would have not had 27,000, but instead 39,000. And this is going to be our answer, but I want to go over this just for a moment. Yeah, that's not a very good 9, is it? 39,000. So what happened? We had net income on the income statement of $39,000. We paid out $12,000 in dividends, okay? And so that resulted in a net increase to retained earnings of 27,000. And assuming that we did everything right up here, and we did, then this holds true, okay? So the $27,000 increase from the 30,000 that they talk about here to this 57,000 right here is the result of net income of $39,000 and dividends paid out in the amount of $12,000.